My name is Stephen. I'm currently employed and contributing to a 401k, but I am over 70 years old. I'm interested in taking money out of my 401k and putting it into something where I can purchase property. But I still need to keep my 401k because I'm still working and my company is still contributing to it for me. Also, I have some rental property in California that I would like to sell in the June 2023 timeframe because that's when my son will be graduating college. I was wondering if you have some idea where you might be opening up investments in that timeframe. Thank you.
Well, thank you so much, Stephen. So, a couple of things. I mean, we at Morris Invest, we are always building new properties, right? Our team is always building new properties in the markets that we are located in. So, we are in West Texas. That's one of our primary markets. So, we've just opened up Odessa and Midland, but we're in Lubbock. And so, we have other markets coming online all the time, which, it takes us a long time. If you've watched any of our videos or listened to our podcast, we're analyzing market research and demographic research and job growth research, and all of that stuff goes into deciding whether or not we're going to buy land and start to build new construction rental properties. So we've got things that we have a year out in the plans. We don't announce those ahead of time, but stay tuned for that. So yes, I would just, Stephen, just book a call with our team and just start having those discussions with our team members so we can start to learn about your goals over the next year. That would be my advice. So just go to morrisinvest.com and book a call with our team. It's free, and at least we can start talking. So to prep for 2023, that would be my advice on that piece. And then good piece about selling California properties. I mean, again, California is one of the worst states in the United States to invest in because it's one of the least friendly landlord states in the country. And they continue to add laws to make it more difficult for landlords. So I personally would never invest in California. It sounds like you've had some success with that. That's great. The properties now may have appreciated to give you that ability now to sell that for a nice profit. Maybe you can roll them into a 1031 exchange into like-kind assets in Texas or other places, whatever you decide. Not paying the taxes on that, on the sale of those properties, and rolling that in might be a great option for you. So one thing we'll talk about on the phone with you, if you book a call with us, we can look at that structure and see if it makes sense, depending on how long you've owned those properties and what the benefit, what the profit would be on those properties. So a lot of times we'll have individuals that own like a multi-million-dollar property, in Arizona or California. And of course, the rent is not keeping up with the amount of money that's in that property. It just doesn't make sense, right? You're going to get $5,000, $3,000 a month in rent, $4,000 a month in rent, but the property is worth over $1 million. Again, the numbers don't make sense there. I would much rather than sell that $1 million property and buy 5 properties that can give me a much higher internal rate of return than what I'm able to get from an ROI perspective. It's just out of whack. So again, just playing with the numbers, we can figure that out. And then it might make sense to do a 1031 exchange to save you on the taxes once that transfer is complete. As far as the 401k goes, that was another piece of your question. If you are, here's the thing with a 401k, my feelings about this. I believe it's a terrible retirement vehicle. Okay. So if you are looking at a 401k as the answer to your prayers, and Stephen, I know you're not, but if you are, you need to look elsewhere because it is not going to get you to the promised land of providing you cash flow at the end of your life. It's going to be a pile of money and you're going to pay taxes on it because it's tax deferred, right? And most people think of, oh, well, it's great. I'm in my 30s and it's tax deferred. I'm going to pay it when I retire. Well, my goal is to retire wealthier in a higher tax bracket. So I'm going to pay more in taxes when I retire. People don't think about that. Also thinking about you're partnering with the United States government. The 401k is a partnership with the U.S. government. And I don't know if you've been paying attention to what the United States government is doing or how up and up they are. The last person in the world or organization I would want to be partnering with is the United States government. They just sent $40 billion to Ukraine, and they can't even get their act together to provide baby formula in the United States. So the last place I'm going to spend and partner with is the United States government, which can switch things up on a dime and screw you big time. Now, the only reason I would keep doing a 401k contribution is if I'm getting a company match, which, as you know, are going away. Company matches are not happening, they're disappearing. But in some cases now, because they're trying to attract employees, they may be bringing some of these incentives back. So if you do get a company match where your company is going to match up to 5 or 6% of your contribution, great. That's about the only time that I encourage people to have a 401k, because then you're getting free money. You know, your company is giving you up to a certain percentage in matching funds in the 401k. But I will caution you, most of the time that the matching funds that they're providing in a 401k are the company's own stock. So maybe your company is not the best, and so you're getting stock in the company that you work for as a match. So check that. Make sure you read the fine print on your 401k plan before you sit there and say, man, this is the greatest thing in the world. My company's providing me all this money. And also, you'll have to be an employee there for a number of years to have a certain amount vested before they will actually match that amount. So if you're there for 1 year or whatever, it's not going to be enough. You have to be an employee for a number of years to have the benefits of that 401k matching program with your company. So when I was doing that, when I had my 401k a number of years ago, I set it, they would match up to 6%. And I kept it. I only contributed 6%. And I made sure that I was also not putting it into the stock market. I was doing it in market funds at the time, because I did not want my money, my future, my family's future, tied to the stock market. You know, what is the S&P 500 doing? So I made sure that my money was out of that in my 401k and up to the matching program. And then I used my 401k as leverage to buy rental properties, which is a great thing that you can do. So, Stephen, one thing you could do is to borrow from your 401k without penalty. Most 401k providers will allow you to borrow, and that's enough for a down payment on a rental property. Most people don't know that you can even borrow from a 401k. I'm not talking about a withdrawal, but a borrowing, and it's a loan to yourself. We have full videos here on the channel and whole episodes on leveraging your 401k to invest in real estate. But that is to say, there's ways to use it, whether it's leverage, borrowing, or even if you did want to do a withdrawal, you know, it's totally up to you. And yes, many, like when I had Fidelity with my 401k, I wasn't able to close that account until I left the company. Like, they will not let you touch that stuff. And I'm like, this is my money. It's my retirement money. What do you mean I can't touch it? The only thing I could do was borrow against it and invest in real estate. But I was like, no, I want this money. I want to be able to use it and buy houses. You know, I don't want it in stocks, but I couldn't touch it until I left the company. So guess what? I left the company. Then I was able to use it to invest. So anyway, Stephen, I hope you found that helpful. Just some things to think about. And pointing you in the right direction. We'd love to help you kind of in that guidance for 2023 as you're prepping for your son to graduate. And I'm curious why that's an issue, though, the son graduating piece. Like, what does that have to do with anything? Sometimes, and I'm not saying that this is your situation, but sometimes people get it in their heads that they have this date for some reason, right? And then you're waiting to invest because your son's going to graduate. Might not have anything to do with investing. It just might be some artificial date you've stuck in your head. And we can unpack that a little bit as well on the phone and kind of point you in that direction. If you have a question, please feel free to come over to our website. Go to morrisinvest.com. Click on the little microphone icon down in the lower right-hand corner and leave us a 30-second voicemail question, and we will answer it here on the show. Now go out there, take action, and become a real estate investor. I still believe it's the number one way to build and preserve your family's wealth. We'll see you next time.